So hello guys, this is a special guest, Steven, the calculator guy, one of my favorites. Very cool guy, and obviously I learned a lot and still learning, and hopefully we can have a nice live here and ask some questions. Let me just invite as well, share the stream uh, to everyone. So yeah, hi Steven, and we can maybe start asking the questions because I know you're busy. So
Well, thanks for having me.
let's go ahead with the first one. What is the crypto situation at the moment, in your opinion, and what should we do?
Yeah, that's an excellent question. I just right now did a Twitter post on sort of like macro charts, so you can look at the total crypto market cap or BTC dominance or like DeFi market cap, and like all of these charts are telling different stories, which are pretty interesting. But anyone in crypto knows, right? We've been in a bearish situation since November. Uh, Pretty bearish recently. I think we're still bearish, but luckily there are a lot of strategies to make money in bear markets. If you haven't learned those, at least learn those. You don't have to jump into those today, but you should have strategies for every market type. At least if you're going to be in DeFi. If you're just buying blue chips and holding them forever, do your thing. It's a great strategy. But if you want to make some sort of like passive income or yield, definitely have some bear strategies in your back pocket, because I think we're still bearish and we're going to be bearish for a while longer.
Yeah, true. So what are your favorite ones? Those you were covering the delta neutral ones, yeah?
Yeah, so I like delta neutral. If you guys don't know what delta neutral is, delta just means change, and neutral, is neutral. So a delta neutral strategy is a strategy where you're invested in something, some asset, but your initial investment doesn't get affected by the volatility of that asset. So let's say you have a delta neutral strategy on Ethereum. Ethereum goes up. Well, you don't experience any of that upside. Ethereum goes down. You don't experience any of that downside. Currently, or clearly, these are better strategies for bear markets because you don't want to be affected by those downsides. Now, delta neutral strategies are pretty hard to find. One very interesting one with Umami is coming up. I do recommend checking that out. They're working with GMX to create that strategy. My favorite bear market strategies right now are short farming. So short farming and then
Sure.
short farming with leverage. Yeah, I made up this term a while ago, trying to get people to use it. Short farming just means that you are collateralizing like USDC or some sort of stablecoin. You're borrowing a volatile asset against it, and then you're farming that volatile asset. Very simple. So when you borrow, you're immediately neutral because you haven't sold it yet. So if it goes up or down, doesn't matter. All you have to do is return it when you're done, right? It's like borrowing a book from a store. You collateralize USDC, you borrow the book, you return it later. Doesn't matter if it goes up or down, you're not affected by that price. But if you farm it, so if you're splitting that volatile asset in half, like half USDC, half Phantom, for example, half Solana, for example, half AVAX, for example, now you have short exposure. So if Avalanche goes down, that USDC that you got from selling half of it is going to buy the Avalanche in a liquidity pool, for example, and you're going to end up with more Avalanche. So when you go to return your Avalanche in the future, you're going to have an excess amount of Avalanche, and all that excess Avalanche or Phantom or Solana or whatever it is profit. It's yours to keep. You benefit from the markets going down. And right now, I think ways in which you can benefit from the market going down is probably the best bets or the most asymmetric bets. You can do that with leverage and pseudo delta neutrality on platforms like Francium or Alpha Homora or Taro, and I do have some videos about that. So go and check those out if you want to learn more.
So Alpha Homora, yeah, I've seen a couple of videos about it. Which one would you recommend? Because I've seen the single finance as well.
Let's
I was
see.
covering that once.
So if you see the videos right there, the one that looks different. So it's the one to the right of yield nodes, which I think is my most hated video so far because I
Uh,
try to give an objective view of yield nodes, but it says short farming with leverage. Yeah, that one right there
mm-hmm.
just gives an instructional guide to how to do this short farming strategy with or without leverage.
Yeah. Yeah, and what do you think about the situation where is going to finish the bear market, or the problems, or another downturn again?
That's a good question. I don't know where the end is. I mean, I'm not a macro economist, but I do know that when you reduce interest rates for decades, and then interest rates go to virtually zero, and then you have a financial situation where you now have to increase interest rates, you're in for bad times, right? We're going to see some tough times with the markets. I don't imagine we're going to pull out of this bear market anytime soon. Some people are saying 2026, maybe 2025. I'd be fine with that. I would much rather see 2024 as a turnaround point, and some people are predicting that as well. But I'm not trying to time the market. I'm just utilizing strategies that are beneficial in different market conditions. Because currently the charts just say bearish, and I'm not going to fight. I'm not going to fight the Fed, right? The Fed is de-risking, which means that when the Fed put a bunch of money into equities during the COVID crash in order to save the economy, well, they had to eventually de-risk from those equities. As they de-risk from the equities, what that means effectively is a bunch of equities are being sold and then put into bonds or so don't fight the Fed. Whatever they're doing, probably going to affect the economy. Just follow what they're doing.
So, what you recommend keeping more in stables, or wait it out, or?
Yeah, I mean, well, again, if we're bearish, you can make money off bear markets, right? Just,
Mhm.
I mean, one thing you can do, you can share. I can share my screen, right? Let me share my screen real quick.
Yeah, yeah.
Uh, and I like doing this, so I understand. Yeah, let's proceed. Yep, this is the one. Okay, you guys gonna probably see a. All right, can you see my screen?
Yeah.
All right, let's go to Bitcoin and let's just look at Bitcoin USDC as an example. Let's go auto log. So I got some indicators here. Okay, so this is the weekly chart, right? Doesn't look awesome. We can look at one. We can look at the daily chart if you want to, because that looks even more devastating. But right, if you're shorting the market, if you're a bear, then
Each
this
stone.
is what the market looks like,
Each stone.
and that's pretty good, right?
Each
It
stone.
looks like a bull market. So effectively, instead of trying to fight the market, you can work with the markets, right?
Each.
We've been. Sorry, are you saying something? I can't.
Yeah, sorry, it was my daughter. Just
Oh,
just a
I have
second.
3 kids. I totally
Oh my
understand.
goodness, she always comes in the right moment.
Yep, I get it. That's why I have to work at a community center now because my kids will not let me record videos for the life of
Yeah.
me.
You got yourself an office now, yeah.
I think you might be muted,
Oh,
or I can't hear
can
you,
you hear me? Yeah, yeah. You got yourself an office now, yeah.
or we lost your mic, or it's me.
Why is it me?
I hope it's not me. Let's see.
Can you
Nope,
hear me?
my headphones are working. Um,
Can you hear me?
hmm.
Um,
So presumably you guys can hear me. Uh,
yeah, they say they can hear everyone. I don't know if you can hear
and
me now.
you're lighting up, which means you should be talking. So
Yeah, yeah, yeah.
what's going on here? Settings. No, that's dark mode. Menu. Settings. Uh, is there a way I can leave and come back? Maybe that'll fix it. I'm gonna
Yeah, or click on the mic.
try that. Hopefully it works. I'll be right back.
Yeah, yeah. Okay. Hopefully we'll have him back in a second. Let me just go through some of these strategies. Oh yeah. Yeah. Is it any
Ah,
better?
still can't hear you.
You can't hear me.
Can't hear you. This is strange. So I see
Yeah.
your box lighting up. I know my headphones are working. They're not turned off. Don't know what's going on.
Yeah, I don't see anything on my side either.
Let's try. I can hear you now.
Yeah.
My fault. I don't somehow mid changed the devices.
All right, all right. Yeah, there was. Yeah, I can see your mic now in the little window, so I think it's fine now. All right, let's go back to. Let me just, or you can share your screen, or I will do on mine. But let's say for a complete beginner, where would you start here now, on Beefy or any other platform? What would you recommend to do now in these tough times to be
Sure, I
become a
saw.
millionaire, become a millionaire in a week?
Yeah, if you want to become a millionaire in a week, you can rob a bank, and or start a bank. That might work. With or start off with $999,000, and then just gotta make one
Yeah,
thousand
yeah.
more. Okay, so I see that you're looking at Beefy on the Avalanche chain. I saw you looking at Grape. Now, Grape is an interesting investment. So, Grape, if you guys don't know, is a seniorage token. It's very similar to uh, Tomb, if you guys know about that one. Effectively, Grape is a stablecoin, right? And when it goes above $1, which is called going above peg, more Grape is minted and given to shareholders. When Grape goes below $1, you're supposed to burn your Grape to reduce the supply, which generally increases the price of an asset. And then you burn it for a bond, you redeem that bond for Grape later on. It's a confusing mechanism. All you guys have to know that if you want to profit from this high risk investment, you can LP, Grape, and MIM, another stablecoin. Now, MIM is a safer stablecoin, not necessarily safe, but safer because it's over collateralized. You should really know your stablecoins before investing in anything because all stablecoins are not created equal. MIM is an over collateralized stablecoin, which means it can only be created if it is backed by more collateral than it is worth, right? So if you wanted to create $1 of MIM, you have to collateralize like $1.50 of Ethereum or Avalanche or whatever else. If those prices go down too far, you get liquidated just to make sure that the MIM is still fully collateralized. Grape is purely algorithmic, and you can think of UST as an example of when algos can go wrong. So, very cool Grape MIM liquidity pool, but there's a non-zero chance of Grape depegging and the investment being bunk. But as of right now, it's been doing pretty well. Been doing pretty well for quite some time, actually. Go ahead. You want to say something?
Yeah, yeah. I think it lost peg twice in the last 4 or 5 months, so it's quite good compared to some other ones.
Absolutely. Another cautionary tale here, though, is that Tomb, which is backed by billionaire Harry Ye, probably lost peg a few times. It's the original seniorage protocol that started all these different forks. Like Grape is one of the more popular ones. EMP is one for Ethereum. Bomb is one for Bitcoin. Grape is one for him. Tomb has yet to regain peg. They had a really big depegging event, and that was like the most trusted one. So it can happen to any of them. I want people just to be aware of that. This is a high risk investment, but it's definitely an interesting short term play. You can jump in there. You're getting 0.73% per day, which is really good, right? However, if it depegs and goes down dramatically, you can still lose some of your initial capital.
Yeah, yeah, because you can jump on them, just have to be careful and watch them like a hog, like I say, every day. Uh, did you hear about this carbon finance, which is like carbon? I was covering it yesterday. Uh, yeah, which is
Carbon
like a
finance.
form,
Let's see.
which
Oh,
is
this
fractional
looks.
algorithm synthetic token.
Yeah, it looks like a fork of the one on
Yeah,
Aurora.
Yeah. There was one front.
Polaris. Polaris.
Yeah,
It
yeah,
looks like
yeah,
a fork of Polaris.
yeah.
And look, it even has the same sort of assets. So yeah, I mean, this is just another one of these where if the price of the underlying asset goes above peg, it means more. Everyone gets a bunch of money. Yay! If it goes below, you're supposed to burn the asset and bond it. If you're LPing, you're getting a whole bunch of APY, a whole bunch of APR rewards. So they're really cool, certainly. But with these ones, you're also going to be exposed to the asset that the stable is pegged to. So in this case, near is the asset that C near presumably is pegged to. So near is following the markets. Near is also going down. So what you might want to do to pseudo neutralize this investment is collateralize some USDC or USDT, borrow near, split that near into near C near, and then farm that. So that way you're not really exposed to the price action of near. You're just getting all of the rewards with none of the volatility risk, but you still have that depeg risk.
Yeah. They're all like really, really complicated stuff when you look at them. If somebody just wants to jump on something, easy and make some money, I always say just chill out for a second and learn a little bit before you jump
Yeah,
on this.
you should definitely know the risks of the investment before you invest. I mean, you can definitely get lucky. I know plenty of people who jumped into EMP, for example, or OM, for example, or even Strong
Yeah,
Block, for example, without really knowing how they worked at all. And they just got in early. So, they got in at the right time and they took profit, which is something I always recommend doing. Please, for the love of God, take profit. Take profit. Or get your initials out. What that means is whatever your initial investment is, as soon as you can, maybe you're up 25%, maybe you're up 30%, take your initials out. The rest is house money. Just, let it grow by itself. Your risk off.
exactly.
No more risk.
The problem is when you, let's say, have $100 and you want to multiply it, it grows
Right.
a little bit. Then obviously you want to let it run for a longer time. You
Yeah.
don't take the profits, and then you lose, most of it. So,
And then you lose most of it or all of it. Yeah, absolutely.
yeah, the
Well, I
best
mean, there are
strategy is
definitely,
like put like a
yeah.
lot of money and then take out, daily or something. But it's obviously not the best recommendation.
Well, if you're starting small, then you have to sort of be risk on, which is unfortunate. And you have to put a lot of time into monitoring your investments. Like you have to do things like, EMP or Polaris or Grape Finance. You have to be in these sort of high risk, high reward environments, and you have to be watching them and know when to take out and move to the next newest thing that's going to do well. You
Yeah,
know, Following Discord, following dev teams is going to help you perform well in doing that. But during a bear market, it's twice as hard as it is during a bull market, where I'd say 30% of all projects succeed in the first month, and you can make some money off of that. In a bear market, it's like what 5%, less than that. So, yeah, I mean, some of the ones have definitely
unless you
performed
know
better
how
than
to
other
short.
ones,
Yeah,
unless you know how to short, which I highly recommend learning how to do in DeFi or in CeFi. You can also short in CeFi. It's probably a lot easier with like perpetuals or futures. But I like DeFi, so I'm going to short farm because I want to get nice yield while also having short exposure to underlying volatile assets.
so where would you put $100 if you had now?
$100. That's a great question. Depends. Is it my last $100, or do I have a lot of other money? That tells me risk, right? Because you want to
Yeah,
allocate your portfolio based off of risk tolerance, but also uh, based off of percent allocations of your portfolio. So my recommendation: don't invest in any DeFi protocol with more than 5% of your portfolio, just because you never know what can happen, right? UST, which is one of the in Anchor, one of the most trusted protocols, highest TVL at one point in time in all of DeFi.
no one
UST
expected
died
that.
in 3 days. 3 days. So exactly, if you only had 5% of your portfolio in there, oh well, maybe you got out with a 70% loss, 70% loss of 5%. You're down to what you took a 3% loss in your portfolio. Okay, you're still having a good time. You're still doing all right. Uh, so let's say you want to put, let's say $100 is 5% of your portfolio. Where do you want to go make money? It's a good question. If you're short farming, I recommend using Solend and Francium on Solana, or Aave and Alpha Homora on Avalanche, or if you like Phantom, you can do that with like Geist and Taro. Like those are the three short farm opportunities I would recommend on those three chains. If you want to be even more risky, you can do something like a grape finance, for example, where you're going to get high yields on seniorage. It has relatively stable performance. There's growing interest in the community. However, it does rely on new investment, so it has a sense of Ponzi-nomics to it. Much like EMP money and bomb money, like all of these rely on new investment. They don't really have external revenue models, but they have a lot of interest. And right now, people in DeFi are searching for things that are interesting. So I'm not advocating for these protocols. I'm simply saying if you want to allocate $100 to a high risk investment, uh, Grape Finance isn't a bad choice.
Yeah. What do you think about Phantom? Does it still have life in it, or are we are we done?
It's a great question. Does it still have life in it? Yeah, it still has life in it. Now, I don't know if it has as much life as like a 13-year-old dog, or if it has full life ahead of it. That's really up to the future development teams, right? And protocols being brought to Phantom. I think probably one of the best protocols on Phantom is Beethoven. Beethoven is now moving to L2s, Ethereum L2s. They'll still be on
Hmm.
Phantom as well, but they're diversifying chains, which is good for them. Uh, Taro is a good protocol on Phantom. Um, I don't know. I don't know. Phantom is going to be one of the L1s, layer one blockchains that I think struggles a lot and continues to struggle for a while until they either get a makeover or get a new narrative. Uh, L2s seem to be having, well, with the exception of Optimism, L2s seem to be having a good time right now.
Hmm. We got some question here from a fan. Um,
10,000 worth of stables, liquid, in 23 assets. Should I leave my stables in my wallet or somewhere you could park them? So, one thing to consider is how much money will it cost you to invest that $10,000 in DeFi, right? If it costs you 1% and you're getting 10% APY, for example, it's going to take you over a month just to recoup that 1%. And if it takes you 1% to then get it back into your bank account, well, then it's going to take you over 2 months. Now, is that protocol, going to last more than 2 months? I don't know. There are certainly many protocols that will cost you less than 1% to get there. So the answer is complicated. $10,000 generally is a good size investment for stables. One thing you may want to look into, and this will take you a month or two to recoup, but is a very solid investment because it's generating money straight from fees, is Oasis. So what Oasis does is they do Uniswap version 3 concentrated liquidity. What that means is they only add liquidity in a very, very tight range, so they maximize their swap fees, and then Oasis will leverage that up 50 times. So you're betting on the stability of DAI, which is the largest decentralized stablecoin that exists, and it's over collateralized, which is good, and USDC, which is in my opinion, the safest stablecoin that exists. Your target is like 15 to 20% APY. So, presuming that takes you 1% of your investment to enter that position, you're targeting about uh, a little bit less than a month to recoup your fees, and then everything after that is profit. Now, here's a secret. To enter the high yield pool, there's two vaults for the stablecoins. There's Vault A and Vault B. You want to be in Vault 1A. Now, there is no public link for that. So send me a message on Twitter, and I'll get you that link to Vault B, the one that does better in performance.
okay, I'll definitely share your links and also maybe that one if you get to me. Yeah, I think that's because we had only half an hour. Maybe we can catch up another time. My camera is not working properly, but thank you very much, Stephen, for coming. And we're gonna have to do it again sometime. Maybe some update in a month or two, and see how we get it. Maybe we'll be out of the woods already with the bear market, and we can have some nice other strategies for becoming millionaires. No.
It would be great to give some bull market strategies as well. Yeah, absolutely. Uh, Thank you so much for having me. This was fun. I hope we get to do it again sometime.
No problem. Thank you, and have a good one, Steve.
All right. Cheers.